Tata Motors. So let's quickly get our research team in and run through the stocks that they have been watching out for. Before we come to the numbers and their spectacular performance, Anuj, technical stocks that you will watch out for technical reasons?
Indeed, Lata. Two large cap stocks, TCS and HDFC, both saw massive delivery based selling yesterday. TCS is showing signs of recovery in pre-open, but HDFC is not. So these will be two stocks which quite clearly will be watching out for. And HDFC more importantly because intraday charts of HDFC normally tell you the market sentiment. So that will be the one to watch out for.
Quickly, Pragya, JP Associates, you expect a severe beating?
Yes, Lata, you know, the problem is the fact that the company has reported a loss for the first time in many years, in fact in a decade now, and in fact, you know, the reported EBITDA of the company is less than the interest that they are paying. So, you know, company not being able to service its interest cost and its depreciation cost out of the, you know, operational performance that it's generating. Cement continues to be weak, you know, construction margins, we don't know if they'll survive, and, you know, real estate, two of its key important segments starting to take a beating now. So, you know, all those cues looking very negative for JP Associates.
Okay, let's cheer up the mood then. Tata Motors.
Well, all upgrades coming in, most of them are at least. CLSA has upgraded the stock to a buy. They've raised their target price to 450 versus 405 earlier. They say that the new models that are coming up also will sort of bring further cheer to the margins. Macquarie maintains an outperform with a target price of 475. They say JLR has posted their best ever margins this quarter and that is sustainable. The India business though has delivered weaker than expected numbers. And Deutsche Bank maintains a buy with a target price of 440. They say that the valuations of JLR compared to some of its global peers are looking quite attractive. JLR trading at less than 3 times FY15 EV to EBITDA versus close to 4 times for many of its peers. So across the board, there are buy calls coming in. But similar case for Sun Pharma. Actually, the stock is up after good performance from Taro. Ekta, take it away.
Sonia, well, now Sun Pharma numbers are also due this week, which is on the 13th of February, and now expectations are ranging quite high for the EBITDA as well as the profitability margins. I spoke to a couple of analysts. They're expecting margins of anywhere above 40% for Sun Pharma this quarter, with profitabilities above a profit figure of at least above 1,300 crores this quarter for Sun Pharma. Taro numbers extremely strong, and that's the reason we expect, because sales were up 15%. There was a rise in pricing despite a decrease in volumes. The margins came in at a high base of around 56%. They improved to 63.2%, which is one of the record performances from Taro in terms of margins. And the net income was a total growth of 30%, which too contributed to the EBITDA and profits.
Oh, absolutely. Fine. Numbers due today. Tata Steel and Hindalco. Tata Steel. Hindalco because of Novelis. Tell us, Nigel.
Indeed, Lata. Actually, the markets are expecting a very good set of numbers. You can make that out. The stock is up 1% odd. After ArcelorMittal's numbers, they are expecting really that EBITDA per ton for the European operations to come in excess of $30 per ton. The Indian operations, they'll be broadly stable. That volumes will increase because of the capacity expansion coming on stream. And stay tuned for any kind of commentary with regard to the debt reduction as well as with regard to the Shah Committee report, because they derive nearly around 45 to 50% of the iron ore requirement from Odisha. Hindalco as well, the Novelis numbers not looking too great, but a couple of brokerages, they're quite buoyant on the stock. This is because valuations are quite attractive at this point of time.
All right. Well, let me quickly go again to our team. Anything more you want to add, Pragya? Because the stock, as you guessed, Jaiprakash Associates, is down about 2.5. Worst performer in the Nifty.
Well, that's right, Lata. You know, the stock has been beaten way out of shape. You know, there were hopes of asset monetization on this company for a very long time, with, you know, many announcements coming in from the companies and the management as well. The street is now just waiting for them to deliver on this guidance, because, you know, it can just turn around the overall interest story. We know that the pressures on cement and the other businesses is really a result of the macro slowdown, and that has to turn on a fundamental basis. But, you know, what the company can do is to turn around the overall interest cost. You know, it's going up by 250 crores on an absolute basis on a year-on-year basis, which is what is the concern, you know, which the street has. So, you know, until some positive announcements come on that, we can see a meaningful reduction on the overall debt of the company. You know, things will look very sorry as far as JP Associates is concerned.
All right, Pragya, thanks for that. So JP Associates down 1%. The stock to really focus on is Tata Motors. That's up about 4.5%. Not just are the numbers this time stellar on Jaguar Land Rover, but the management in their conference call had highlighted that they can maintain this higher than 16% margin for Jaguar Land Rover, and they will go ahead and increase their capex for FY15 to 3.5 to 3.7 billion pounds, only because they are convinced that some of their new products will see a very good momentum going ahead. Also, they've decided to plug some of their product gaps by launching lower-end luxury vehicles like the Baby Jaguar, etc. So that will sort of give them some more in terms of leverage going ahead. So Tata Motors is the big mover, JLR delivering record high margins this time around. But on the flip side, you have Dhanlaxmi Bank. It's a 5% downslide now.
No, I would worry that there would be more, and I'll tell you why. You know, the net worth, I think, if I looked at last year's reserves, is about 629 crore, equity capital 108 crore. So the total net worth about 740 crore, and losses are 546 crore gross NPLs plus 119 crore losses. I would assume some of the losses have been provided for, but even then, I mean, you're looking at a 660 crore hole when equity is 740 crore. This is a little scary. You know, normally growth will come, profits will come, and you will bridge. But look at the NII performance. Forget the net profit. NII fallen from 76 crore to 54 crore, which means you're not making money. The retail banking business itself is going at a loss. I mean, you would expect at least that will make money. Treasury lost because you have to write down some asset. So, you know, where will you make money to plug the hole, and what if the hole got wider? This is a bit worrisome as far as Dhanlaxmi is concerned. We will have to wait for the bank to start increasing, first coming into profit and then increasing. Okay, Nigel, before I run away with Dhanlaxmi Bank, a small bank at that, you have the big boy Novelis and Hindalco also to speak about.
Indeed, Lata. Actually, Novelis's numbers, they were very disappointing, but just looking at the brokerages, they're positive on the stock. And given that Hindalco comes out with the numbers in the next couple of days, that's going to be interesting. There's also clarity with regard to their coal block allocation. That's what the market is watching for. Tata Steel, on the other hand, that stock is up close around 2% odd. ArcelorMittal, in fact, one important dialogue that they did make, one important comment that they did make is that, in fact, the European steel consumption this year is likely to grow between 1.5 to 2.5%, and that's from a degrowth in last year. So if that stands, then maybe, in fact, we could see a re-rating on Tata Steel as well, and that's why that stock is excited ahead of its numbers.
Okay, yeah, pretty excited, 1.5 higher after having moved a lot. Ekta, IFCI is up 1%, you are watching that, and so is Sun doing reasonably well. Anything more you want to add?
Well, not much for Sun Pharma, Lata, because, you know, Sun Pharma's numbers will be out on the 13th, and all of the analysts are actually reworking their estimates. In fact, an analyst that I was just speaking to said that there could even be a profit surprise of 1,500 crores this quarter from Sun Pharma in terms of its profitability at least, and that would be a huge surprise, or it would possibly see further upside. But otherwise, we even have IFCI, which you spoke about, but it isn't seeing much of a runaway rally simply because the gross NPAs and net NPAs, despite the fact that they've come off sequentially, are still elevated at 16% and 9% respectively. But there was an improvement in the net interest margins at around 3.6 versus 2.7%. They are bank license aspirants as well, so maybe there is more clarity on news flow, which the market would like to see on that front as well.
All right, guys, thanks for that. But let's just